Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Aussie dollar US dollar FX for Thursday, May 30th, 2013. Well, the candle we're analysing here is this second last candle on the chart. That last candle there is currently trading and hasn't finalised trading, but that second last candle is the candle that has finalised trading for today. And today we saw a change of trend to the upside. If you recall, for the previous day's trading, I was looking for that change of trend. We have had confirmation of that trend with a candle with a higher high and a higher low. The reason that I was looking for it was the interaction with this very strong support around the 95.81 level and 95.36 level, and today we saw the market test down to the 95.81 level again and be rejected from there in a very strong manner, and pretty much in line with the trading that we've seen over the past week. And the reason why there was potential for that change of trend to the upside were these three small body candles at the end of this very solid downtrend, and that represented the sellers losing quite some momentum, and the market being in somewhat of an indecisive phase, and it did suggest potential for that change of trend. Having said that, however, if we look at the characteristics of this current candle, there isn't a lot of support for the buyers on the establishment of this first time frame uptrend, and it does raise some serious doubt about the ability of this market now to trade up to some decently higher levels. Now, this is a spinning top type candle, and spinning top candles are candles of indecision, and that's where we have a small body with a shadow on the top and the bottom, and that indecisiveness does suggest that the buyers aren't supporting this newly established first time frame uptrend as we'd like to see. One factor in the favour of the buyers, however, is that we do have a white body candle, and the white body denotes the buyers making an amount of net bullish progress on the day between the open and the close, and that's in line with the previous day's trading, so they have maintained some upside momentum in net terms, but it still is only a fairly small body. And the problem here is that we had price rejection to the downside from above the 96.62 level, very strong resistance, and we've seen the market trade to there or above there on 1, 2, 3, 4 for the past 4 consecutive trading days, and prior to that area just below it or at it held as support, so now it's holding as resistance, and it has potential to be a very strong barrier to this market. If we look at how this current candle is developing, we've been rejected from there once again today. Now, that the market hasn't closed for today's trading, so be aware of that, but rejection from there is in line with what we saw for the previous 3 trading days, and does suggest that the market may test down to lower levels once again at 95.81. However, having said that, looking at the shadow on the bottom, 95.81 has held a strong support, so we're not likely to see the market break out above this area or below this area in a hurry. We will need to see the buyers find some solid momentum for a breakout above this area, or for the sellers to find some solid downside momentum for a breakout down below. So what we've seen is a very strong trend in the market taking a rest, some indecisiveness coming into the market at the moment, and we need resolution of that. Resolution will be a solid bullish close above these barriers or a solid bearish close below these barriers. Looking at where this candle has closed, it has closed between the midpoint level and the high, suggesting that the buyers have closed with control once again in line with the previous day's trading. So that does give us some hope. It isn't strong control. The buyers did lose commitment when they tested above 96.62 and to the important Ichimoku indicator in the short-term time frame, the Tenkan-sen, and there was rejection from there. So that is a solid barrier just above the 96.62 level as well. And if we look at today's trading, the market has traded exactly to that level and been rejected from there. Now, in terms of the Fibonacci extension and with the change of trend to the upside, we're looking at the relationship of the first time frame uptrend to the previous time the market was trending up, and here we saw the market trading above the 100% level and closing just at that level, being rejected from above the 100% level on an indecisive spinning top candle. It does suggest that there is potential for a change of trend back to the downside, and so we will be looking for a lower high and lower low as confirmation of that change of trend. And looking at the Fibonacci retracement here today, we saw the market interact with the 50% level and be rejected from there in a fairly strong manner. And it also suggests that there is potential for a change of trend. So we will be looking for a potential lower high and lower low. Now, in terms of Ichimoku, obviously a bearish market in the long-term time frame with this market trading down below the cloud, a bearish market in the medium-term time frame by trading down below the Kijun-sen, and also bearish in the short-term time frame by trading below the Tenkan-sen. As I've mentioned very often, when we have a market that's trending down very strongly in that first time frame, the Tenkan-sen is the first area that we see the market hold as resistance, and that's what we've seen today and the previous day's trading, and we tend to see some solid rejection from there. So this suggests that there is potential for a change of trend back to the downside, but really what we should be doing is watching this area around the Tenkan-sen at 96.84, 85 for a potential breakout. And if we do see a breakout up above there and a bullish close up above there, this market could find some solid momentum to even trade back up to the 98.59 level. So let's be aware of that. But at the moment, no sign that there will be a breakout up above. To be honest, it does seem as though there is better potential for the market to trade back to the downside. But having said that, solid support down below at the 95.81 and 95.36 level. With this market trading down below all of the Ichimoku indicators, we are in a negative bias. We do have negative bias, or we are in a downtrend in all three time frames. And looking at the Chica span here, that is below the corresponding price action, so it's confirming the negativity that we're seeing in all three time frames and suggesting that it's more likely that the market will test to lower levels rather than higher levels, but we do require confirmation of all of that. The only reservation I have about trading to lower levels here is the extent of the move now down below the cloud and the Kijun-sen, and we are looking a little bit overextended, and we've seen today with this change of trend that the market is attempting to find equilibrium. We have moved back towards this flat Kijun-sen, and there is a possibility of that happening, and that's why we do need to watch the area around this Tenkan-sen and the high of today's trading for a potential continuation of the trend to the upside. But really, as with what we're seeing with most markets at the moment, we are seeing congestion. We do need to wait for resolution of these congestion areas and look for a breakout either above or below, and use that as our trading guide.